Good morning, team. DJ, you're right there. Michelle. Good morning to all of you guys. Morning, Margaret. Nathan. A few people jumping on now, which is great. Thanks, team. Good to see you. Fabulous Friday. Happy Friday. Alison, back at ya. Friday. All good. Arnie. Graham, Sean. Good to see you guys here. Welcome to another Wealth Coffee Chat. Friday the 3rd of September. A little morning coffee show that we get together, have a bit of a yarn. Thanks for the regulars coming back. If you don't know, if you're new, give us a shout in the chat. If you haven't met me before, Jason Witten is my name. Been property investing over 20 years and helping property investors invest in property across Australia and New Zealand through our coaching and mentoring program as we've been rolling along. So there you go. And each day, around about 8:05, we get together with some crazy cool crew, just like you guys. We just have a bit of a chat about what's going on in the marketplace, little bits of media, little bits of information. Try and make some sense of it. Make some sense of it, as we're rolling along. So there you go. Good to have everyone here. Like I said before, if you're new, chucker, hey, I'm new in the chat. Good to meet you. Hopefully you're there. Hey, Alison. Andy is out of action, unfortunately. So we might be saving up a couple of weeks of Wealth, Wine and Wisdom for the following week. It's not the same when I do it by myself. So there you go. So stand by. We will be back. Wealth, Wine and Wisdom is just on pause just for the moment. Last week was a public holiday for me, and then this week Andy's out of action. So we'll get to it. But there you go. Hopefully we can get it back on track next week on Friday. But this morning, Friday the 3rd, I wanted to talk to you guys about some stuff about rent. The rents. What's going on with the rents? There we go. We've got a new user in the house. I think maybe, hey, thanks for the shout out. We might not be able to see your name in there in the chat, unfortunately, because I think you might be in one of the groups. You're probably in Passionate Property Investors. But there, good to see. Thanks for joining us today. And you're relatively new to investing, so welcome along. That's awesome. And LJ McGuinness, 2 days of listening. Thanks for dialing in. Great to hear from you guys. Today I want to talk to you guys about the rents. What's going on in the marketplace? And, what do we think that's going on? I believe there are the beginnings, the sounds, the machinations of a rent boom coming. But, however, asterisk, there are some things that have to happen before we get there. And buddy of mine, another shout out to Timmy Boyle. He's a good fellow. He has always got good charts and statistics, but I thought I'd have a bit of a look at this one. Now, there's a lot going on in these couple of charts, but let's see if we can break it down and make some sense of it, okay? And what I want to talk about, by and large, is what's happened since around about that time with rents, okay? And if we have a look at the marketplace, we had some rent compression really happening from middle of August 2017 all the way to the beginning of COVID. The beginning of COVID. It wasn't COVID that put a bit of a squeeze on the rents. It was something that happened before COVID, and it happened at around mid-2017. It was showing up, and it showed up for a few years. Can you guys remember what happened that affected the confidence of the property market back in those days? It feels like a long time ago, right? 2021 right now. What happened around August 17? Credit squeeze. Yeah, it certainly happened. The credit squeeze. There was some conversations around APRA. The Australian Prudential Regulatory Authority, APRA, causing causing a bit of a ruckus in the marketplace. Certainly that was going on. And there's another thing that started to occur as well, team, at that point, if you can remember, and maybe you can, maybe you can't. There was a political groundswell of targeting investors, property investors, for negative gearing and capital gains tax. We got to take that away, et cetera, et cetera. Now, that was some political grandstanding to win points. And of recent times, both political parties, the Labor Party have said they're not going to do that anymore. Now, this is not a political conversation in any way, shape, or form. It's just a property conversation. And even if they do, at some point, remove some of the capital gains or some of the negative gearing advantages that property brings, which are significant and amazing and awesome, team. By the way, some of the reasons, some of the good benefits, so it's like a side benefit of owning real estate, then that's perfectly fine because we will handle that. You have a look at New Zealand, who's our cousin across the waters. They have had all manner of things go on in their marketplace. Negative gearing removed, capital gains tax introduced. They never had it. And their market has gone ballistic. It's boomed. Sadly, unfortunately, politicians really don't understand markets, certainly property markets. They're pretty thick, both sides of them. So this is not a dispersion on any of them. And what happens is when you remove investors from the marketplace, new properties do not come to market, new stock does not come to market, and you have a problem with supply, everyone. And that is anyone who bloody understands and concentrates for 5 minutes can see that. But it's interesting. All right, there you go. As we go again. Yeah, look, Allison's sort of saying, bank even calculated how much takeaway coffee she bought, and they saw it in her bank statement, and they were like, oh, listen, you buy too much coffee. How ludicrous is that stuff? Anyway, so they lost their mind. They were all carrying like pork chops. This is not about the APRA thing. But what I wanted to show you guys is happening now is we're having a bounce in both apartments and houses in the rents. Now, the challenge has been this is kind of here. This chart's a little bit busy, so I'll sort of zoom in for us all, right? The zero line right here, which was there. Okay, we really had quite a lot of compression due to COVID, due to landlord concessions and bank and all that sort of stuff. All of that stuff, which was great. Everybody chipped in. The rents compressed across the nation in apartments, and also they compressed a little bit in houses as well. Not as much, but certainly there was some compression around the time COVID hit, and, that was to be expected, okay? The challenge has been for us all, folks, that the pressures, that normal pressures that used to keep the rents bubbling along and growing at a decent rate have now are not back in full force. But you can see this gap here, this rent growth gap, okay, where, what was that? Around about, call it 3 years. 3 years of rent growth gap, and we now need to try and make it back up as we go along, okay? Now, the thing that I wanted to show you guys, and I showed you the other day the calculator that we put our rents in, and who can remember the percentage of rent growth we need over time to get to a really good outcome? Who can remember the number? Chuck that one in the chat. Were any of you guys on that call the other day or had a look, right? We've got someone here. The property rates are high at the moment. Property rates. Do you think it will go into consolidation? And it would be a good time to buy a year later. Yeah, good question. I don't think the property prices are going to contract anytime soon, mate. board shooting. Thanks for your question. I don't think they're going to contract anytime soon. We don't have enough supply, especially on really good stuff. And interest rates are really, really, really low, crazy low. Depends on where you are. Give us a shout out if you're okay, mate, to tell us where you are, like your location, and I might have a little bit more specific feedback depending on where you live, or where you're trying to buy more specifically as you go. So, the team, the other day when we were talking, you want to have at least a 3 to 4% compounding growth rate on your rents. And if you have a look at here, you can see. Can you see that little line there, that green line? There's a lot of busyness going on. There's a lot of busyness going on these charts. I get it. So stick with me. I'm trying to make a point. If you average that out across there, we're looking at a solid 4% team over time. So if we look, say, August 16 to August 21, okay, so we're looking, that's, almost a 6-year, like, 5-year, a 5-year growth rate of 4% across that time on our rent. So that's great. That's what we're looking for, aren't we? As we go along. And if you come over here and have a look at this, then, the rents, depending on the cities, and that's the other thing too, team. Check it out. You got to have a look at which city you're in, which area you're in, and that's why we talk about this idea of diversification when it comes to property growth and rent growth, okay? Because you can see certain places grew faster than others, okay, as we go. So what does that all mean? Well, if you have a look at this part here, we've seen our cash rate, team, go to absolutely bugger all. Zero, team. And I think there's a few things that we're going to talk about in a second that are going to sort of say, right, are we going to get any rent growth soon or a boom? And I think the answer is yes, but it's not yet. Board shootings in Canberra. Well, mate, Canberra is tough. If you're trying to buy a house, the prices are up there and they're going to stay there. There's no supply in Canberra, mate. You've got to go further out. You've got to go a long way out, actually. We did a lot of work in Canberra a few years ago, and fortunately have done very well with our clients. We got about 200 deals done down there. Yeah, quite fantastic. Mate, in Canberra, wages are high, salaries are high, interest rates are low, okay? And what happens is when people have disposable income, okay? Because what happens here, if you have a look at this team, let's say right now, this is the cash rate. So the interest rate would have been maybe, remember off the top of my head, call it 6% in 2016. And at the moment, interest rate, call it 2%, even if it's 3%, right? Okay, that's a 50% reduction. That's a 50% reduction in the cost of owning a property, okay? So tell me, team, when the true cost to you comes out of your pocket, it goes down 50%, what goes up 50%? What goes up? Well, what goes up is your appetite for the next better quality property. So before, at this level here, technically, this is not exact, but technically, at 6%, you could buy 500 property, and now at 3%, you can buy 700. Now, when you can buy a $700,000 property as a owner occupier team, do you go and say, oh no, you know what? I'll stick with 500, thanks. No, you don't. You go and buy a $700,000 property. That's what happens. So that's what's going on as you go. Yeah, and there you go. Anyway, so my point is there a rent boom coming on? That was the sort of the conversation today. And I think, yes, I think the rent boom is going to be, I think it's 2 years away. Okay. And we need, I don't think interest rates are going to rise anytime soon. You guys have heard me talk about this one before. Actually, I think that green's pretty average, actually. You guys have heard me talk about this before. Once you're on low interest rates, it's very hard to not be on very low interest rates. That's a bit of a challenge for all of the institutions. I think they're going to struggle. They're going to really struggle. So what's got to happen? Okay, what's got to happen here? Well, number one, we need the wages to go up. I think that's going to take some time. Number two, we need immigration. Immigration. Try and spell that. Haven't had enough coffee yet this morning. I might have even messed that up. We'll see how we go. We need wages to go up. We need immigration to go up as we go for the rents to kick in. We need, obviously, the lockdowns to finish, and we need to be able to move around and get the economy back to whatever we might want to do as we're traveling along. Because really, at the end of the day, team, everyone's not going to be confident to pay more if we can't get around and feel, we can get on the road and travel and whatever it might be. Well, that'll be interesting to see, actually. I think everyone will go on a holiday as soon as lockdown finishes, or we can. And then, the fourth one, supply and demand. Well, we need that to stay low. And I think that will occur in the next little bit. So, these are the things that are going to contribute to a rent boom, team. And I think this one is going to be the ignition, the flame, the spark, the tinder, or whatever it is, that will light the rocket ship when we have a bit of a look at that as you go. So, as you go. So, yeah, Alison, exactly. Melbourne, unfortunately, if you have a bit of a look, Melbourne has been Melbourne had the harshest reductions in rent in both apartments and also houses as well because of the extended lockdown. Yep, and Sydney, a little bit of a beef as well. But the good news is we're seeing upward momentum across all markets at the moment. I don't think that's just getting back to parity, catching up to where it was, team. It's not a rent boom yet. It was just like there was abnormal, unusual times. You tell me, like you go to Melbourne and you can go and rent, $1K from the city for $400 or $500 a week. That's ludicrous. Where in Melbourne, in Sydney or Brisbane, like Sydney, you're paying like $2,000 a week, and they're the same size city, for crying out loud. Arguably, Melbourne's a bit easier. And then we've got places like Brisbane, which are half the size, that rent for more. So Melbourne's undervalued when it comes to the rents, and I think they're going to go up pretty quickly. But there you go. There you go. Anyway, a little warning: don't call Charles over there. Charles, don't put your number in here, man. That's just not on. I don't know how we can get rid of that, but anyway, we've got a little bit of someone dropping by. Anyway, there you go. Wealth Coffee Chat done and dusted for the day. Friday. You guys enjoy yourself over the weekend. Have a good time. Have a rest, whatever you do. We'll be back Monday. Like I said, we won't be here for Wealth, Wine and Wisdom this afternoon, team. Andy is out of action, but we'll be back at it next week, I'm sure, as we're rolling along. So You guys have a good time. Great to chat with you guys. Thanks for joining us. Some of the newbies. Awesome to have you here as well. So hopefully, if you got any questions you want me to chat about anything, just shout it out in the chat, team. And I'll always see if I can get to some of your questions and answer them on a morning live. All right, gang. That's it. Done. You guys have an awesome weekend. Over and out.